Hello guys, welcome to another trade breakdown video. Today I'll be breaking down the trade that I took on Wednesday while I was backtesting. It was 21st August 2024. As you can see to the downside, it was a trade taken on Wednesday. As you can see, there was also a fair value gap. So now let me explain this trade from the start, from the higher time frames. Okay, so the higher time frame, the weekly was bullish according to how the previous weekly closed. It was very bullish, reacting from this sort of demand zone, creating this demand. Now you can argue that the demand zone has changed because of how this candle is closed. This is the demand zone right around here due to this breakout structure, right? So I will not show you how I mark the supply and demand because it's very easy and I do it, and it's literally the same thing I do. I have also written it somewhere, right? So if you want to learn how to mark these zones, you can watch my previous videos, or also you can DM me on Instagram. Okay, so I'll be replying to all of the messages here. And according to how this candle closed on Tuesday, my higher time frame weekly bias is bullish. So until and unless the market is going up on the daily time frame, I'm looking for buys. I only trade with the bias which is bullish right now. So obviously on Wednesday I was looking for buys on GBP USD, trading with the trend. And if I go to DXY to confirm my bias, and it was clearly bearish, as you can see. According to how this Tuesday candle closed, you can argue that this demand zone is not respected on the daily time frame, and this fair value gap on the daily time frame has been filled to the T. Yes, I can see that too. So this fair value gap has been filled to the T, and after it filled up the fair value gap, this candle has not shown any signs of rejection, any signs of wick right here. So that clearly shows us that there are huge amount of sellers present in the market. So going on the next day, it makes more sense to look for sells rather than buys, for me at least, according to how I trade. So that was exactly what I was looking. There is also a fair value gap to the upside, but until and unless the price shows me that it wants to go and fill up that fair value gap, I will not trade to fill up that fair value gap. Right now I'm trading with the trend, meaning I'm only looking for buys on GBP USD and sells on DXY. So that is when I go to the lower time frames like the H4. So on the H4, the closest demand zone that I can spot, and I mark the demand zones when I'm looking for buys on GU, and supply zones when I'm looking for sells on GU. Simple as that. That's how simple you should keep your analysis. As you can see on the 4 hourly, this was the low that caused this higher high, higher low, higher high. This demand zone right here is valid due to this breakout structure. You can argue this is the demand zone right around here, but I didn't mark that demand zone because obviously I anticipated that demand will not get respected and the next demand will get respected. So that was, and also the next demand was looking very little much cleaner. So that is the exact reason why I marked the trade. So clearly we can see on Monday I was looking for, on Tuesday sorry, I was looking for a buy from this sort of demand right here, which didn't happen because the momentum was very high. So that is when, if I show you the DXY quickly, I mean, if I show you DXY, the DXY has literally, the previous day low is so close, right? So it makes sense for DXY to sweep the previous day low and the previous day high on GBP USD, right? So that was one of the things to keep in mind, and that is when I waited for the Asian range to close, because until and unless the Asian range closes, I don't do nothing. And also it doesn't make sense to do nothing because our whole strategy is based on the Asian range, right? So clearly we can see the Asian range close something like this. On DXY we can clearly see the previous day low was swept. The previous day low was swept on DXY, which is SMT, and SMT, if we use in our bias, it is very strong confluence. Even today in the live markets I caught a beautiful sell, literally a beautiful sell on GBP USD using the concept SMT, right? So it was a beautiful trade. I was so close to entering here because my MetaTrader didn't open at the time I was entering, so I didn't enter the trade. Otherwise this trade alone would have passed me, or at least would bring me very close to passing my first perform challenge, as you can see right around here, meaning the first phase of the challenge account I would risk 2.5%, and it would literally bring me so close to passing the perform challenge account first phase, right? So literally I am seeing my progress in real time. I'm improving so much now. I know how to, like, I have the time windows where to trade. I know what I'm looking for every single day, buys, sells. I know how to read liquidity. I already, before the move happened, I anticipated there was liquidity in this zone on Euro USD. As you can see, literally I told my guys that there is liquidity here and there will be some sort of reaction after sweeping this liquidity, which happened, right? So many people bought here, and then this trade didn't play out. But also because I'm transparent with you guys, I will also show you one loss that I took here. I was anticipating like SMT, right? So I was anticipating this trade to go and take the previous day low here on Euro USD. So I was looking for sells which didn't play out. So obviously you can't win them all. You will win some, you will lose some. That's part of the game. So sorry for getting out of context. That was not our trade. Literally I'm making a video about backtesting. That trade video will be made, so stay patient for that. And going on Wednesday, there was no London news, and on USD there was FOMC meeting minutes, as you can see. So obviously there was SMT, so it made so much sense for GBP USD to go and sweep the previous day high. Also it was aligning with the bias. So now the only thing that I need to do is find a zone to trade from. The why is now clear, like why, where and when, right? We need to know the why, where and when in the markets. So obviously why was clear, the where was here on the M30. The H1 was not clear, as you can see it, but on the M30 we can clearly see this demand zone was very well respected. 3 white soldiers, you can argue that 3 bullish candles, huge bullish candles appeared from this zone, and it made so much of sense to have a reaction from this zone somewhere around here. So at first the move did happen, but that move was a break-even trade, as you can see. This was 1:2.26, so it was a break-even trade. So we also took that trade. If I took this trade, I would be break-even / I would secure some profits, and I would enter the trade again after seeing this M15 rejection right around here. And that is when I entered with a 5.5 pip stop loss, and I entered at this market. And once you enter the market, even if it goes and take your stop loss, it is what it is, okay? So once you enter a position, it's either your stop loss or a take profit, until and unless it goes somewhere in your profit. So you have to learn how to manage your trade. In this case, this was a winning trade, a beautiful trade right around here. So yeah, and if I show you the trade, I also journal this trade, as you can see all of the things why I took this trade: M30 demand, M15 rejection, M1 change of character, DXY correlation. So everything I want to see in a trade was here. So yeah, mate, I am literally seeing the progress in real time, and soon I'm gonna become profitable. I am gonna pass my first challenge account, and that's very soon. So I told you the SMT, right? The previous day high did got swept to the T. SMT did work, and now on to the next one. See you in the next video. Wash.